All right, everyone. I thought I'd make a very quick video about what I've built in the last 2 months here in Wangr. It's the response has been really great, and we've changed a lot. I've changed a lot. You might have noticed we have a new front page, and I will just walk you through all the things that we have on Wangr, which is not only the whale watch. So the front page gives you a quick overview of the general page. Some of the features that we have, you have the daily market brief. You can expand any of these cards. And what this does is it monitors the main crypto subreddits on Reddit. My idea behind this was that in general, Reddit serves as a very good filter. Everyone posts the news and links and they get upvoted or downvoted. There are discussions in there, and we check all of the new posts in the main subreddits that are crypto related, and we gauge the sentiment. In the end, it's just ChatGPT reading all of the posts and the comments, and they are scored by upvote and downvote and engagement. So this happens and updates once per day. And what we have here is the overall sentiment skews bullish. Many posts celebrate continued accumulation, just really what has been posted and what has been commented on. And we have what people are bullish about and what people are bearish about. Then the next card is the polymarket card, where we have basically a whale watch as well and wallets of interest, which are the wallets that continuously win. The idea behind here is that we might have some insiders on Whale Watch for Polymarket as well. And the difference for this one is that I do not monitor all of Polymarket, but mainly just market related news and crypto related markets and bets. And for any of these, you can always click on this little arrow and it will take you to the dedicated page with even more detail, which I will show you in a little bit. Then we have the general whale watch, which is a summary of the whales on Hyperliquid, Binance, and Bybit for F, Sol, and Bitcoin, the long short ratios, the number of positions, the average entry, and their mean liquidation prices. And the idea behind here is, of course, that you could see that if most of the whales are long, but they're kind of in a loss. If you were to enter, you could not do much worse than any of the whales if you enter below or higher. And you can also kind of gauge what the sentiment is over here. And we have the largest longs and the largest shorts. This is our friend Garrett Bullish. Um, this one is a new one, if I remember correctly, but we will see it in a second. Then over here we have the aggregations of the liquidations in the past 24 hours on Bybit, Binance, and Hyperliquid, the number of shorts, longs that have been liquidated. The largest in the last 24 hours, which was a 3 million Bitcoin long that has been liquidated. And the largest short was a 10 million Bitcoin along of the all-time records. We have the arbitrage scanners, which show you which arbitrages are the most valuable right now. If there's also a spot arbitrage, then it will show this, but only if it's profitable. And the correlations in the last 24 hours between any of the coins. And the void traders, which is one of my favorite because it does not filter by whales. The idea behind this was that originally we had everyone wanted to follow the whales, but I thought that maybe there's some smaller traders that are just really good, but they have not traded themselves up to a size of 10, 50, or 100 million yet, but they're still worth watching. So this is behind Voy, which we'll also look at in a second. And you can, of course, check any of the addresses here. You can just make a quick shortcut by checking the address, which I will show you in a little bit too. So let's first go to the I guess whale watch, because this is how most of you found us, I think. And the whale watch here shows you the overall open interest and how much of the whales make up the whole market here on the top left. And this has been very surprising to me because it hovers mostly above 60%. It's been going down, which means that a lot more smaller traders are entering the market, or whales are closing. I think in this case, whales are more cautious because I've seen about 14 or 15,000 Bitcoin here in the last few days. It updates every few seconds and checks for new positions that have been entered. You have a general overview over here, the number of Bitcoin long and short, the number of whales that we have that are long or short. So you see that we have more long whales than short whales, but overall, the sizes of the positions are still skewing short. We have the average, median, low, and high entry prices, as well as the spread between the long and shorts, and the average P&L, long and short. We can see that the shorts are still much more in profit than the longs. The average leverage, that kind of tells you how confident each of the longs or shorts are. That's relatively equal at the moment. We see that longs have mostly been more risk taking, which we have on the liquidation map as well. And you can see the average win rate between longs and shorts of the whales. This was a feature that we have here. You can add or tag, which adds to your personal watch list, which I will show you in a little bit. And you can expand any of the whales and see their recent trades, their stats, the current open positions. This number one whale, for example, that has the largest short positions is short on Bitcoin and short on F. You can expand this and see more details of this position. You can also click here and you will enter into the personal page of this whale and see their recent trades as well as all of their previous and past trades. If you expand any of these positions, you can see where they entered and where they exited. So for example, in this position, they sold here expecting it to go down, but then they eventually closed at a loss. What is important here is that it's possible that they sold more along the way and closed in smaller trades. As you can see, there's 18 fills. So this is where the position started, and this is where they closed all of it at the end. I do calculate the average for you, but it's important to note that this is not entirely as you can see for most of them, because I've noticed that mostly they scale in. Eventually, I will add those small green and red bubbles where they bought and sold. I just haven't gotten into it. So you can see buy, 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 sell, 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 sell over here to have a little bit of a more general picture. Generally, you can just follow the average though, which is in the end important because that makes what they earned and what they lost in the end. You can also see the fees because some of these whales just mainly work for funding fees, I've noticed, because it does not make sense. There is some whales that have really a lot of positions open at all times, and it seems like they're mostly just earning funding fees. So this was one of the whales that we've been following for quite some time. He has adjusted his take profit orders now, I see, but they're still mostly lower. and he has some recent trades. He started to go into the Nasdaq as we see. All right. Then next for Polymarket, which is something that I've added recently, we have the whales. And these are the biggest positions in the crypto or market related markets. And we have the VOI, which just mainly shows you the best traders by win rate on Polymarket. The liquidations have the whale graveyard, and I've also added a summary page which shows you over the last 24 hours which sites got more liquidated or um, closed at the recent times. We also have the mean, median, and the count of liquidation, so you can see if it's more bigger traders or smaller traders that got liquidated. In general, it's just the smaller traders. But you have a summary here on the left, and you can also expand this to 24 hours. We also have this for, uh, I didn't finish the whale watch, I guess we also have the whale watch for Ethereum. And if you go into whales, you can see the insights, um, which will show you in general just the summary of the entries and the leverage, the median, the standard deviations, um, the spread and the positioning, and also how they've been accumulating over time. And you can expand this up to 3 days for the data. And that summarizes all of the whales in the last few days. So you can have the long short ratio, and you can see how this changes over time. And above you have the Bitcoin price, so you also know how this might relate to price. And if you see a flip here and a change later over there, it might mean that the sentiment of the whales actually changed. All right, continue with liquidations where I didn't finish. The liquidation map here is something that I've shared quite a few times, which I find much more useful than the other liquidation maps that you see overall. The reason why is that I show you here in this visualization what is generally wrong with the other liquidation maps is that in any of the other liquidation maps, the liquidation prices are calculated and they're implied. And the problem with that, which I've hinted on a couple of times, is that most of these whales are in cross, and the way that those liquidation maps are calculated is that if I open a 100x Bitcoin um, with this margin, then it will mark the liquidation where I would be if I only use that margin. But if I'm in cross, it should actually take into account all of my account value because obviously this also goes into the margin. This is dynamic, of course, and it would change. But and this is also updated for this reason regularly by itself every few minutes, if I remember correctly. And the way that you can see how it relates to the wrong liquidation maps is by this heat map here. So if you see a darker green or a darker red, then you know that, for example, this liquidation would show up somewhere around here for the other liquidation maps because it's very high leverage. But you can see the true liquidation is actually very high up. The reason why is that the whales that make up this bucket do have a large account value, or they generally just use very low risk. And that is the problem with the other liquidation maps as well. You can go up and down, and you can find some of the real liquidation problems over here. And for example, this long would also show up very closely here, but as you can see, he would only get liquidated if Bitcoin would move all the way down to 35,000 or 34,000. And that's similar with any of the other ones. All right. I guess we could go on and show you the Bitcoin analytics charts, which again show the sentiment that we have over here. You can see the exchange balance changes for Binance and Bitfinex and all of them if there's inflow and outflow. In general, if there's an inflow into the exchanges, then that's generally bad. What you see mostly on X and on a lot of the other clickbait news is that if there are these green bars where Binance or someone else sells Bitcoin, that this is bad. But in generally, this is good because it does not mean that Binance is selling Bitcoin. It means that their customers are transferring out Bitcoin. And if you transfer Bitcoin out of the exchange, it means that you generally tend to hold it. You you transfer Bitcoin into the exchange if you want to sell it. So this is generally fairly important, I think, to make this distinguishable in general. And we have the ETFs as well. And here we have the FedWatch. You can see how the price of Bitcoin relates to the balance sheet and also to the Fed rate that comes over here over time. And in general, it's good if the balance sheet increases and the Fed rate decreases, right? The order book goes into the same type of logic that I had for the liquidation map. And I just realized that we kind of, I built a lot in the last month or two, and this video is going to be very long. But this I already explained. It shows you basically the real value of the order book, which you can see in detail here, is how much would the price move if someone would market buy 500 Bitcoin or 1000 Bitcoin, and this lets you gauge liquidity in the markets. A good market would not move so much, it's very liquid. That means that there's a lot of orders very close to the current price that would fill this market order, so the price would not move a lot. And as you can see, there's very few buyers below, and that generally means that when people sell, the price would move quite a lot down. And we have a lot of buyers above, so you cannot really move the price up a lot at the moment. And you can do this by Bybit, by Binance, and Hyperliquid. And interestingly, Hyperliquid seems to have more liquidity, which surprised me the past few hours. The context statistics are the average 15 minutes, 24-hour mean P90 and P99 uh, trades. So you can also see on average what you're supposed to expect the price to move by volatility at the current moment. The correlations I've kind of hinted at before. This is a hedge that many people do. In generally, what would help is if you find a negatively correlated pair, then you can buy both. And if one moves up, the other should move down, and you kind of would mitigate your losses. And we have the historical, the current, and the time series correlations of any of the assets that we have over here. It also updates once per day or something like this. I don't recall how I build it exactly, but I think it's once per day. And this was one of the first things that most of you were interested in. If you go into pump and dump, which is over here, then we have about 1 year of pump and dumps on Binance that have been analyzed. And there's quite a few indicators statistically at fundamental statistics that can predict by a certain confidence that pump or dump is going to happen in the next 14 days. And in generally, it's about accumulation patterns and volatility that changes. And you can also see exactly by yourself when this pump started and pump started or this dump started. You can filter by pump or by dump here. and then you can just check those. I guess Ohm has been dumped quite a lot, and that's very interesting. And you might also notice that it follows volatility for the most part, which is the blue line over here. We have on-chain analytics that you can use for any of the coins, which shows you the holder concentration by the top 5%, top 10%. And ideally, you would want this to be as small as possible and definitely not like this, because a few whales can pretty much wreck everyone else. Then we go to arbitrage. I've written a blog post about this. In general, we scan everything. Right now, there's nothing that is profitable on spot. Um, it does appear sometimes though, and we have a few that are profitable on futures, but these are very low. And we also have DEX arbitrage, which I think should be, no, it's not. I have to add this to the menu. So you have the DEX arbitrage, which is pretty much the same. You can buy on one exchange and sell on the other and make the spread. And it's profitable after fees. So this goes with any of them. If the trade is profitable, then I will show it profitable here, and that accounts for the fees. The POTOS watch I kind of have not updated for a while. Wallets of interest is what I showed you earlier, which is the way that I classify all of the traders on Hyperliquid and their performance, which you can filter and search through by average hold, minimum win rate, the min type of positions, and here you have a general overview. And the idea behind this is that, as I mentioned, some very good traders might not be whales yet, but we might want to follow them early. And Polymarket we've looked at before. You have the Polymarket arbitrage scanner, which shows you if there is a arbitrage. This is not just Polymarket, this is prediction markets. And this means that if you buy at Kalshi a no at 86 cents, and if you buy yes at Polymarket for 11 cents, then you basically get a guaranteed payout for $1, but you only have to pay 97 cents for it. This means you will be guaranteed to win 3 cents. So the problem for this is that this one, which is the most attractive, is that it's in a year or two, I guess, in 2027 once this resolves. So you would have to wait quite a long time until this market resolves and you get the $1. But you will get it, unless, of course, Polymarket or Kalshi go bankrupt until then. The match shows you if I think, or the system behind it thinks that this is the same market, and that is something that you have to pay very good attention to, because most of the arbitrages have slight nuances. So once you go on Kalshi and once you go on Polymarket, you have to check the rules and that this really is the same market and the same type of bet. With sports, this is much easier to do. With things like this, there is more to read. And the explorations that we have is just musings by me because I like data and I try to visualize it. Black Friday is October 10th, and what has happened here. I also wrote a blog post about it where you can see a little bit more. For the AI reports, I generate AI reports for any of the projects. We summarize the white paper, we get who is the team, who was behind it, what type of exits they have. We show the on-chain analytics of the project itself. And this is part AI generated, part on-chain. Um, the no memes time was something we did for a while. The Dogenomics is a small part of interest that I did. And I guess the last one is Pump Fun that I've created a while ago. Well, yesterday actually. This has analytics that is a data analyst for Pump Fund. I will introduce this in more detail in a separate video, but in general, you can see if you were to launch a coin on Pump Fund, what type of coin would do better, at what time of the day, and on which day you would want to post it, because there is a difference. In the end, it's like social media. This has a social aspect of it, and the days, the words, and these type of things, it really works the same way. So you can think about it if you were to post a post on Facebook, the type of words you would use, and the trending topics that we have in this day, and the hour of the day. All of this matters in the exact same way as they would matter anywhere else. And I think for now, this is mostly what we have. The crypto indices I introduced. This is just by performance of a group of coins, where you can see what is doing well, what is doing not well, and we weight them differently.